Prateek Agarwal, good morning. Thank you for joining us. What are you telling your clients? Are you telling clients to participate now? Worst of the fall is behind us, or we are still in an uneven, uncertain, and unpredictable environment?
Yeah, good morning. Very clearly on valuations, we believe we are at sustainable levels, especially when you put bond yields to earning yield valuation metrics along with the PE valuation metrics, which is still a bit higher than long period average. So our sense is, yes, quarter two is going to be weak. With the weakness in the quarter two, one may see a bit of a dip in the marketplace, but that should be a good opportunity to put in some bit of the money.
Prateek, we just heard out snippets of a conversation with Rakesh Jhunjhunwala, and he seems to be of the view that the kind of problems that we're seeing in pharma are cultural in nature, that there is going to be a lot of opportunity within the pharma space. Do you share that optimism?
To some extent, yes. Pharma, if we divide it into the formulation generic space, overall, let me speak first. Over the last 3 to 4 quarters, we are seeing the whole space generate a good CAGR in growth. That gives a lot of hope in the context of valuations which have dipped substantially. Second, people who are doing APIs, intermediates, etc. are benefiting from increase in Chinese prices, which is allowing them better prices and margins and profitability. As far as domestic market go, again, in pockets, companies are able to generate sizable growth. So that again seems to be a good space to look at. Ultimately, the US market, the generator of large sales and profits, maybe not of market cap because it is a generic commoditized market. There we do see issues continuing. There is a class action suit against many Indian companies for ramping up prices, and there would be fines, or there is a prospect of fines against that. So yes, there is that overhang which is there, but otherwise we would believe there are opportunities in that space.
Prateek, just looking at the kind of demand IRCTC IPO has actually seen, and what a staggering response really coming in. We were just talking about in the studio after Rakesh Jhunjhunwala told us yesterday that he sees immense opportunity in PSUs. To begin with, they are the biggest beneficiaries from the corporate tax reform coming in. But where else do you believe within PSUs is there opportunity for investors?
So we have tended to stay away from the PSU pack by and large, but at this juncture, we would believe that oil refining and marketing companies offer an upside. One, because margins are higher and they could sustain, while next quarter on forward basis margins are expected to be squeezed, but we do believe they will sustain for longer. Two, there is this prospect of BPCL getting privatized, maybe to a domestic player or maybe to a foreign player. That we believe could have a good effect on the valuations across the PSU pack. See, a lot of the weakness of the PSU pack is not because of the way business is. Business may be very good, but it is also because of the manner in which the selling keeps happening. How many companies the promoter says that I have a target of selling X percentage during the year. These are the names that I will sell. All beforehand. So that is an issue, and it does crowd out investing in the domestic space. So if they privatize something, it would be a good effect on practically whole of this space.
Hey, I just want to take a look at the markets at the current juncture. 11,352. You've got a 172-point bump up on the Sensex as we speak, and the broader end of the market too holding out by about 0.2%. While media and metals, along with energy, aren't really participating. You've got the Nifty Bank, which is holding out by about 140 points. PSUs as well as the IT basket are firmly in the green. And just to pull up some of the movers and shakers within the broader end of the market, you've got the likes of UCO Bank, CG Power continues to be in the limelight, Info Edge is active, Yes Bank, National Fertilizers, something like CCD, Syndicate Bank and Torrent Pharma, they're all upbeat in today's trading session. What's the outlook then, Prateek, when it comes to the overall bank metals basket? Just wanted to get in your take as to whether or not you see some merit in select names within metals.
So, in the immediate term, we see a weakness in this space continuing given the slowdown globally. In fact, in spaces like steel, where we have anti-dumping duties, steel prices in India have tended to be below the duty protection rates. That also indicates the kind of weakness in the demand that exists within the country. It will take some time. In the near term, do expect this space to remain weak. If global slowdown continues for longer, one should believe it will. It would be good to focus on the users of commodity rather than on the commodity players themselves. That's our thesis, that users of commodities would be reporting gross margin increases for some time to come. And in spite of the domestic slowdown, you may still get a decent EPS increase.
The earnings, it's already that time of the year when we're going to see the quarterly earnings start trickling in. For IT, are you expecting some sort of a double-digit growth?
Yeah, just about that or lower across the space. So it's a good space, good quality enterprises, but growth in EPS is something which leaves a lot to be desired. I think this is a trend which will continue for some more time.
Prateek, give me a sense of your portfolio. What have you bought in this decline?
No, so our portfolio was nicely positioned for the period. While the market may have declined, we were up. We were always with high quality, high growth space, which meant retail, financials, both private sector and NBFCs. It also meant consumers. We did get out of autos where the slowdown bit pretty badly. And yes, we are there in a bit in cement and chemical businesses. So that kind of rounds up our portfolio. It benefited strongly from the cut in taxation. A very large part of our portfolio was full tax paying, and we saw an uptick of 10-12% in EPS expectation across the board on our portfolios.
To have you on the show, Prateek. Thank you so much for taking the time out and speaking with us today. Let's revisit what the market is looking like.
Thank you.
We've